Who cares about a little pullback when you're eyeing 130 from a friggin' cup and handle on the daily chart that dates back like 8 months? Who cares? We're bullish, okay? That's my point. Now, what do we have to do in order to go up? Okay, because I know I just gave you a bunch of bearish sentiment, okay? If we break that level, like I said, and we set a higher high now instead of a lower high, I might start entering long. That's where I'm going to be consider flipping long. Okay. So I know everybody's going to be mad. They see the thumbnail, they see the title. They saw my previous video where I was talking about shorting Bitcoin. Actually, that short's going really good, and a lot of things are starting to turn around on Bitcoin where it's probably where you should be considering a short position right now. As it sits right now, my trade is up over 52% or over 51%, $3,200 profit, something like that. I'll put a screenshot on it. That way you don't have to look on my stupid phone with the stupid glare. But with that being said, I'm going to give you the high level overview. Actually, it's going to be a really thorough breakdown. I'm going to give you a masterclass on moving averages. I'm going to give you a masterclass on bearish divergences. I'm going to show you exactly how we got to where we are, right? Where we could be potentially going from there. So if you want that, make sure that you smash the like button. Make sure you hit subscribe. Boom! Bang on the notification bell. Comment anything that you want in the relevant sections, and let's just get straight into it because there's a lot going on right now. And stuff that people need to be privy to, man. Don't get all triggered in the comments section, man. Drew's not the reason. Drew's not the reason that Bitcoin's going down. Right? Healthy markets are. I have zero control over the market. You hate the fact that I'm walking. You hate the fact that I have, braids and, friggin' long, luscious hair, right? Fine, right? Doesn't have to trigger you. You can bring it in the comment section. I'm going to give you 15 seconds while I'm doing this explaining right now. Get it out of your system. Drop whatever's triggering you in the comments section. All right. And then let's talk about the bearish and the bullish scenarios here and where I see this turning around and why I see the turnaround that's just happened flipping to kind of like a short side. Okay. So drop all your triggers in the comments section below. Appreciate you. Let's get into the charts, baby. All right. I'm going to take all this stuff off. We're going to smash through. I'm going to assume that you were not on my video on the Drew Wolfer OG channel. Okay. We're going to smash through all this stuff. We had a bullish megaphone. It's not looking good on that bullish megaphone. If we close below the close, okay, so remember this number, okay, $95,957.89. If we close below that on this candle or any subsequent candle afterwards, it's a big bad news. Okay, big bad news. And it looks like we could potentially do it within the next couple hours, okay? That bullish megaphone pattern, this is the worst bullish like flag that it's the weakest. So these usually don't play out. And I'll show you exactly what I mean by that because I'll show you another megaphone pattern that broke down. Okay. This one broke down. Okay. This is a bullish megaphone pattern. It was also angling up though, which this is a big no-no, but I just kind of wanted to show you like these things break down. Okay. So that's been broken. Okay. Or at least should be confirmed that it's broken pretty quickly. These almost never break to the upside. The most upside you have is $101,900. Okay. Then we have a current falling wedge. Okay. Again, if we close below this because we've broken outside of it, I'm going to take this other line in the sand off because I think everybody knows the line in the sand from the previous video. We closed below it, by the way. If we break below this, these things like to break up. But the past two times, this one and the one before that, which was this one, neither of these falling wedges broke up. Okay, and that's because we're having a rounded top here. That I'll show you why this is all happening. Okay, so if we close below, again, this candle's closed right here. Bad news for this falling wedge. Okay, we did do that on this macro falling wedge right here. We tried to break above it. We came back inside of it. Boom, we confirmed to the downside. We back tested it. Bam, we came down. That's kind of what you're seeing right here. Okay. Boom, we have not confirmed yet. I get that. We back tested it though, and then we fell immediately, right? So as long as we confirm a close like right here, 95,890 something, right? It's bad news on this. That's confirmed, okay, to be done. Okay. Then we had this micro bull flag. Again, like I don't like to act like Bitcoin's going down, man. I'm just reading the charts. I have no directional bias. want Bitcoin to go up because I want the alts to go up because I own Wolfer Finance and we have Ethereum, Avalanche, Flux, FTM. We run Validator and masternodes for all of them. We want to see them pump, dude. So I'm just showing you what the charts are showing me though. We busted down out of this micro bull flag. Okay. We also busted down out of this micro bull flag. We fell through it. Okay. Then we have the only thing that's looking kind of good for us is a bull flag on the daily, right? And I'll show you the daily chart just so that you can see exactly what I'm talking about. But boom, this is like the bull flag on the daily, right? Now, this is very angled very downward, so this is not a good bull flag. Like, this is a terrible bull flag, actually. If you look at it, they should never be angled this far down, okay? This is a terrible bull flag, so I highly doubt this is going to play out, and I'm going to show you why I don't think this is going to play out with a bunch of other indicators, because we're not just going to base it off of one little thingy, okay? So let's go back to the hourly chart. I'll show you what I'm talking about. Everything that I've tried to find that's bullish has basically broken down. That's the only thing that's even halfway still valid, and it's one of the worst bull flags you're ever going to see. Then we had this 1 hour bull pennant. This is the only thing that's still in play. All right. And I really didn't like this bull pennant. It's not a great bull pennant, right? It's not a great bull pennant, but it does give us a target up to like $110,000, $109,000. But it has never been retested, first off. And this could be a support level. Okay. So let's pull it over. Let's see where that support level could be. Right around $92,000. Okay, if we bounce, then we could be going to 110. Great. We got to smash through 100 first though, because we had a hell of a time trying to get through that last time. Okay, so we know that this megaphone pattern broke down. Then we have the bull flag of 2023 that gives us our target right near where we went, right? Within like 500, 600 bucks. Okay, not great. Then we have the March bull flag. If you zoom out, this is the bottom of that bull flag. The breakout would have taken us to 95K. That's going to be a huge support level, and this is going to be a huge support level. So even if we come back down to 72K, that's the retest of this bull flag. This bull flag has never been retested. The top channel of it. Okay. So that's kind of my point. We do have massive, massive support down here all the way at $72,000. Now, do we get there? I don't necessarily think so. But whatever, we'll see. And I'll show you all the levels on the way down. I'll just show you some of them right now. There's a bunch down here, okay? And then there's going to be even more through here. Okay, so there's a lot, okay? So just let me get to it. Let me cook, baby. We know about the March bull flag. Then we had a cup and handle pattern. Okay, we could literally come all the way down to $70,000 and still, because again, this cup and handle never got back tested. Top of it never got back tested. Guess where that puts us though? 130, baby. This is still in play so long as we stay above $70,000. Who cares about a little pullback when you're eyeing 130 from a friggin' cup and handle on the daily chart that dates back like 8 months? Who cares? We're bullish, okay? That's my point. So again, here's our upward support line that dates back to the very beginning of November. We just broke that, okay? We confirmed the break of it too. We broke it with conviction. We're below the 50. We're below the 100. We came back. We tested the 50. We broke below the 50 here. We tested it twice. It said, nope, sorry. We came below the 100. We confirmed. We back tested it. We fell again. We've got the 100 moving average or 200 moving average down here at 94.5. Guess what else is at 94.5? Okay. It's this old, like all the way back. It's a macro channel all the way back to 2017. It's intersecting right there. So you got massive support at 94.5, and that's a target right there. Like, and look, that was the previous swing high and lower low, right in that range. I'm trying to get through all this stuff really fast. Okay. Why did this happen? Okay, because we know how we got up here, but how do we get down here? And where are we going after we get down here? Especially if we close this candle where it's at, which is below the close of this candle, which spells really bad news for us. Okay, so there's this thing called an MA pattern. If you don't know what it is, please just go look it up. I'm going to give you a master class on it really quick in like 30 seconds or less. But let me get this other thing off of here. Okay. Well, actually, no, let's leave that upward support level on here because I think it's important. Okay, so this is an MA pattern. All right, what this MA pattern is an up, down, up, down, up. Okay, basically the bottom of the M needs to be like slanting upwards or flat. Okay, check. That's good. The Middle of the M needs to be about halfway down from the full staff of the beginning of the M. Okay, check, right? It has to be relatively congruent, right? Or, you can tell it's an M. Check. Okay. Then this A has to retest at least where the M stops, right? Check. It went through it. That's why I drew these lines. This is the neckline of that M. This is the place where we needed to retest. Boom, we fell through it. We retested it again, confirmed below it. Here's the target. Okay. $95,000. Go look it up. It's textbook. Okay. It's literally textbook. Then we have an inverted head, or we have a head and shoulders pattern. Shoulder, left shoulder, right head, right shoulder. Boom. Neckline, again, has to be slanted upwards, okay? And when you're seeing that coming into a large, either one of these, right? Either one of these, whether it's the MA or not, coming into a large, like trend channel that we're trying to break down below, and this is a bearish pattern, this is almost telling you that this line is going to like break this support, right? So the head and shoulders, again, we broke it, we confirmed here, we back tested it on this candle, okay? Same thing with this, right? Same thing with the MA pattern. We back tested it, boom, we back tested the M, bam, we fell, right? Confirmed. The head and shoulders is taking us all the way down to the 200 MA. Like, you can't write this stuff in books, okay? Then we have an inverted cup and handle. Okay, this is a smaller one. We confirmed outside of that. Okay, maybe that's not the greatest cup and handle for you. Maybe you're like, Drew, now you suck. That's not a good cup and handle, inverted cup and handle. Here's a larger one. Again, confirmed outside of it. Bam, got killed, right? Let's zoom out. The target on that is 94.7. The target on the other one is, again, 94.7, okay? Then we have the big inverted cup and handle, right? Here, this would have been the handle, right? Somewhere in this realm. We broke down below it. Again, if we close below this right here, it's confirmed. Guess where that's trying to take us? $92,000, okay? So there's that. Then we've got a smaller cup and handle that, again, took us where we are now, okay? Let's just say that. Probably not the best one, but you see where I'm going with it. This is the November bearish wedge, okay? If you watch my other video, you know exactly what this thing's about. This dates all the way back to the beginning of November, okay? Bearish or rising wedges, they tend to break down. They almost never break up. So what happened, right? We went up, we tried to break out of it, we didn't get it. Boom, we lost the 50 moving average while we were coming into the support of that, right? We broke down, we came up, tried to break back through it, tested the 50 again, fell, tested the 50 again, which was right under the channel, bam, right? Lost the 100 too, and back tested the 100 on the 1 hour, okay? So that's not great. And then we fell below our line in the sand, which broke market structure. Market structure was us doing this. Higher high, higher low, higher high, higher low, higher high. This was actually where we broke market structure again, right? But then we came back and we broke the market structure back to the upside. Higher high, higher low, higher high, higher low. You get it, right? Now we've broken market structure up here. Higher high, right? Higher high, higher low, higher high, same low, lower high, lower low, right? So if we get another lower high and another lower low, we're probably going to take out this low right here, right? This one is the one I'm talking about. Bam, this low, right at 95.7, okay? Which we're within $200 though, right now, okay? So we came back to the line in the sand. We back tested it multiple times, right? We confirmed below it, right? Right here on this candle. And if we come back and we back test it again, even better. That's like, and we get rejected, it's not good news, right? So micro bear flag, okay? What happened on that? Boom, we came back, confirmed right here, bam, came back, back tested it, fell, okay? What was the target on that? Right here, where we caught, right? Then we had another micro bear flag that popped up right after that one did, right? Formed another one. Boom, we came outside of it, tried to confirm outside of it, never did, okay? Fell back into it, fell below it, confirmed here. What was the target on that one? We hit it, right? Same thing right here, right? Caught on it. Then we have another bear flag that broke out, okay? And again, if we confirm here, we're not only confirming the head and shoulders, the inverted cup and handle, but also this bear flag that could take us all the way down to $95,000. So you always got to look for these like smaller trends inside of larger trends that will take you to those targets and make those moves happen. Okay, nobody teaches you this. I do. This is the large rising wedge, okay? These we do not get outside of majority of the time, right? But we did get outside of this one, okay? But then we had a top right here, a rounded top, which is bearish, right? This is going to be a support, but guess where the support is? Right here, right? At the 95.2 range. So if we close below this and we've got all those bearish indicators, guess where the bottom level support on this is? Because again, we know that rising channels like to break down, not up. Okay, so this was an anomaly. This is like less than 30% of the time this happens, right? So it wants to be down here. Guess what's below that? The 200 moving average, okay? And there's a line in the sand right here where like a decision has to be made, right? So we're getting really close to that. That's on like Monday night, okay? Then we have this cup and handle that we thought, could have been like maybe like a regular cup and handle. Nope, it broke down. Okay. Then we've got the bearish rising channel that we've already fallen back into, right? Same thing. If we fall below this one, right? And guess where the support is? Right at the 200 moving average. I'm not saying that it can't bounce there. I'm saying this could definitely be support. But in rising channels, they do not like to break up. They like to break down. Where would that target put us? $78,500. Then you've got like this small rising wedge that again does not like to get broken up. And we're sitting on the friggin' line of it right now. So like if we close below like 95.8 or 95.9 right now, it's not good. Okay. Then we know about all the Bitcoin dominance stuff. We have a bearish divergence on the 1 hour chart. Okay. Let's look at the RSI. Boom. RSI is all the way down here. Bam. Hourly divergence. Okay. Boom. So this stopped on Thursday, November 24th. Thursday, November 24th, let's call it. And we still went up from there. Okay. Now we're pulling back, right? And that's going to give us a target of like $92,000, right? Something like that. Then we have the obvious one on the daily chart. I'm not even going to show you the 4 hour, but I'm going to show you the daily one for sure. So this is the daily bullish diverge or bearish divergence, which you really don't want to see. Okay, daily, boom. And then if you look at the RSI, again, we'll pull it up so that everybody can see it very well, right? If we zoom out, boom, you've got this, boom. Okay, so that's bearish divergence, okay? From the Friday 22nd to the Monday 11th, right? Monday the 11th, Friday the 22nd, boom. And now we're falling, okay? Then you've got your weekly, okay? All right, so here's our weekly bearish divergence. And a lot of people would have said this was like a inverted head and shoulders. Maybe it played out, maybe it didn't, right? But even if it did, it overextended because like the top would have been like right here and the bottom would have been like right here. And if you measure that move, right, it would have been it's already overextended. So let's say it went all the way down to here, right? And then the break point was like right here. It's already overextended. So here's my point. Let's look at the bearish divergence on the monthly chart or on the weekly chart. Boom and bam. So we've got Monday the 18th all the way back to March 4th. Okay. So Monday the 18th all the way back to March 4th. Okay. Massive, massive divergence. Okay. Now let's look at the monthly divergence because there is one. I promise you that. Okay. So then now let's go to the monthly. All right. I need to make sure that my charts stay up to date. That way I don't mess anything up for my own TA because I am taking trades, right? So here we go. Boom. Look at this massive bearish divergence, right? This thing's crazy. Let's say that we even just stop it here, even though it should go all the way down to here, right? Not great, right? All the way from Monday, the 11th of March, all the way back to January 4th of 2021. Okay, so January 4th, 2021, boom, January 4th of 2021, all the way back here. That's how much our bearish divergence goes back to, right? And then if you look, you'll see a micro divergence in this RSI from here to here, okay? This is November 18th back to March 4th, okay? So let's draw a line back to November 9th, 18th. Look at that. That's crazy. So there we go. We've got all that. Okay. Now I'm going to get a little degen on you and I'm going to show you like, okay, first let's just go back. Look how this is where we're going to do the master class on, we already did the divergences. Now we're going to do a master class on friggin' moving averages. Okay. Look how overextended we are on this moving average, right? This is 50 moving average. I'll pop them up. The 50 is literally at $62,000. The 9 moving average on the monthly is at 74K. These moving averages are magnets, okay? Price wants to come back to them, all right? So that's just on the weekly chart, right? Let's go to the monthly and just see what's happening on the monthly, right? Again, the $67,000 is where the moving average is on it's the 9. Look at the 50. It's all the way down here at $40,000. This is not awesome, right? Okay, that's fine. Let's go to the daily. Daily, again, we're already getting magnetized to the 9. And then the 20 is like right down here, 87 grand, right? Which is right where, in my thumbnail, right? Then the 50 is at 76K. Okay, fine. Let's look at the hourly, right? And it's in a bullish formation right now. The 200 is below the 100, which is below the 50, which is below the 20, which is below the 9, right? This is where it starts to get a little hectic once you start getting down to the 1 hour, okay? I'm not going to waste everybody's time doing like every single one, but I'm going to show you everything as much as I can. We lost the 50. The 9 has already gone below the 50 and the 100. The 20 is crossing right now, okay? They're headed towards the 200. Once the 9 gets down here and the 20 gets down here, it's like the worst formation you can have moving averages in, okay? Then, like that's textbook downtrend stuff, all right? Let's go to the 30-minute. Let's see what's happening on the 30-minute. It's already there. The 100, then the 50, the 200 is about to cross the 50. That is, dude, if you don't know what that is, that's called a friggin' death cross on the 30, okay? You're literally about to watch it live. Then you've got the 20 under that. So once the 200 goes above the 50, it's going to go above the 100, and price is going to continue downward, right? Then we've got the 15-minute. It's already done it, right? 200, then the 100, then the 50. This is going to be massive resistance too. The 50 is resistance at 97.5, and the 200 is massive resistance at 98.3. Right? Let's go to the 30-minute. I'll show you what the resistances are going to be there. Massive, massive resistance. There's no way we're getting above 97.6 anytime soon right now. 97.7. These two are intersecting, right? So again, these are now going to act as resistances, not supports like they were. So let's go down to the 10-minute. Now that we've done the 15. 10-minute. 9 is the lowest. 200 is the highest. Bearish pattern, right? Again, 97 all the way up to 97.9. Massive resistances, okay? Let's go to the 5-minute, and then we'll go to the 1. The 5-minute, again, bearish. 9, 20, 50, 100, 200, all the way up to 97.7, okay? Resistances. Let's see what the 1 minute's doing. Let's see if it's starting to turn around. Not really. The 9 is starting to curl back below the 20, especially if we get a couple of more candles over here. And yeah, the 200, 96.5, the 50, 96K, the 100, 96.2. So my point is that all signs are pointing to bearish right now. Okay. No matter what your feelings are, like charts, facts, mathematics, they don't care about your feelings. They don't care about your biases to the market, right? Now, what do we have to do in order to go up? Okay. Because I know I just gave you a bunch of bearish sentiment. Okay. Okay. If we want to go up, all right. And this is a lot of the reason why people, I think, watch, because I give both sides of it, right? If we want to go up, we just got to set a new high right here. All right, this is a lower high, right? If we set a high above this high right here, which is $98,700, but we got a lot to get through to get there, right? We've got to get through the 100. We've got to get through the 50, which we've already been rejected off of twice. We've been rejected off of the 100 once already. It's going to be tough to get there, right? And we got to get through this previous low, right? This line in the sand that we were talking about that was giving us a hard time, right? And we got to get through that. We got to get through the 100. We got to get through the 50. And then if we can set a high above 98,700 exactly, right? If we could do 98,701 and then set high or low somewhere above this low, wherever this low lands, right? That's when we can break the market structure similarly to what we did over here, right? Because remember, we've done this before. Higher high, higher low, higher high, higher low, higher high, higher low, lower high, lower low, right? Lower low, lower high, lower low. Then we came back and we set a higher high to this low or to this previous high, and then a higher low, right? And then another higher high. And then guess what? A higher low, a higher high, a higher low, right? A higher high, a higher low. So we have to get above $98,700 and keep our low above this newly established low, which the line in the sand on that at this point is 95,874. And then we can start going back upwards, okay? Because with the market structure that we've just established, which we already lost this. This is the new market structure. It's a downward trending channel, okay? It's already broken to the downside. And guess what it did? It back tested it. Now, has it confirmed yet? No, because this candle doesn't close for another 12 minutes and 36 seconds. But if it closes here, we've broken that channel. Now we need to break up above that channel, right? Which is right here, 98.7, right? Boom, we break above it. We confirm, we set a lower or a higher low, and then we're off to the races and we can start thinking about 100K. Then that 110 mark on that bull flag, then that 120 mark on this Fibonacci, because again, it's not all bearish, man. Like, I want to show people the uptrend where that could go because there was these retracements that we did, right? 120. All right. And then we've got the cup and handle at 130, giving us a target of 130. Then we've got 185 after that. Then we've got literally 250. And then our full extension on that at the 4.236 is 290. Okay. So this is not all doom and gloom. All right. What I'm saying is that we need to get rid of all some bearish divergences. We need to get the moving averages to start moving back upwards instead of all trending downwards on every single friggin' time frame. And secondarily, we need to take out some of those levels. Because here's the other thing. I want to show you one more thing before we end. Okay. This is liquidity. Okay. This is all going to just be liquidity. Okay, so all of these little levels you're seeing, this is liquidity, okay, all the way down to like right here. This is where people started taking leveraged longs at all of these different points, right? And guess what the market makers love to do? They like to take liquidity. They've already come down. They've kind of tried to take this first one, right? They're trying to take this one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 liquidity levels down to $85,000, which is that 84.5 range that has that long-term support or bullish channel that we broke out of, right? So that's my point. Like, there is going to be a lot of liquidity on the way down. So keep all of that in mind. And I'm going to stay in my short, right? And again, don't come in the comment section, this isn't going to age well. It is. I'm like $3,000 in profit already. If you're dumb, then whatever. But I have my stop loss set in profit. No matter what, I make money on my trade. Okay. If we break that level, like I said, and we set a higher high now instead of a lower high, I might start entering long. That's where I'm going to be consider flipping long, 98.7 range. Okay. We need to see a lot of things happen before then, though. So if you like content like this and you appreciate me bringing it to you, make sure you smash the like button. Make sure you hit subscribe. Boom! Bang on the notification bell. Comment anything you want, and I know you will, in the relevant sections. I appreciate it. Thank you for showing up to this video, and I will see you in the next one. Have a good day, everyone. Peace.